Tonight we will vote on legislation none of us wish we were considering and none of us can afford to see fail. The costs of inaction are far too great. We are already seeing the consequences of a freezing credit market that will only worsen. I hear across my state of New York, small businesses are struggling to find affordable loans to keep their doors open and their inventories stocked. Even larger businesses are being pushed to the breaking point. Throughout the country, the impact of this credit crisis is beginning to be felt with students who are seeing the sources of student loans drying up, interest rates on car payments rising, families who had saved up and acted responsibly seeing higher mortgage rates, shrinking their dream of home ownership. Our economy runs on credit, and underlying that credit is trust. Both the credit and the trust is running out. Essentially, what we are doing here in an intangible way is restoring trust and confidence, and in a very tangible way, helping to restore credit. Now, I think we are here in some respects because we failed to tackle a home mortgage crisis, and now we are facing a market crisis. If we fail to tackle the market crisis, we risk an even deeper economic crisis. I don't think any of us want to see irresponsibility on Wall Street compounded by ineffectiveness in Washington. That's why we must act, even as we do so with regret and reservations, because we have little choice. The proposal we are considering is far from perfect, but it is a far cry from the original plan sent over by the Treasury Department that installed virtually unlimited powers in the hands of the Treasury Secretary. As I said when we first examined that original 3-page proposal, we needed a plan that included checks and balances, not a blank check. And thanks to the leadership here in the Senate and in the House, we have negotiated through the Congress on a bipartisan basis a better alternative that installs taxpayer protections, asserts oversight, and maintains greater accountability. But I think we all recognize that this is not the end, but the beginning of what we must do. And I believe there are 3 big goals that we will have to address even after we pass the rescue package tonight here in the Senate and send it over to the House. First, we must address the home mortgage crisis. For 2 years, I and others have called for action as wave after wave of defaults and foreclosures crashed against communities and the broader economy. We are not yet through the woods. Millions of mortgages are underwater or under the specter of adjustable rates set to rise. I am proposing what we're calling the Home Owners Mortgage Enterprise, an acronym obviously spelling home, to rewrite mortgages and reset terms so that credit-worthy, responsible families can keep their homes and keep making affordable payments. Through such a home program, we'd also be able to consider freezing adjustable mortgage rates and even placing short-term moratoriums on foreclosures. When our country enacted a similar program in the Great Depression, we saved 1 million homes without costing the taxpayers a dime. In fact, the program ended up with a surplus. And only by rewriting the terms of the debt held by families whose mortgages can be salvaged will we recoup a great deal of the value of the debt we are purchasing from Wall Street firms. I also believe we need to consider a real tax credit for home buyers to jumpstart the housing market. This has been an effective tool in the past, and it can be an effective tool again. We have too much supply and too little demand, and getting the liquidity that will be injected into the credit markets to work its way through the entire economy will take time. I think we need not only a supply of liquidity, but an increasing demand, particularly in the housing market. Second, we must be vigilant on behalf of taxpayers, putting in place safeguards so the Treasury is maximizing the value of the assets purchased with taxpayer dollars. We need to have the flexibility to ensure we're not just subsidizing investors and executives, but we should tie this debt relief to strong recapitalization requirements and greater accountability. And third, I think there is general agreement we must pursue broader reforms. That is one of the lessons of this turmoil. I know that Chairman Dodd and others will be holding hearings to try to untangle how we got to where we are. We know we have to rein in executive compensation by giving shareholders a greater role in eliminating loopholes that allow boards to conceal the value of salary packages. We've got to end the quarter-by-quarter mentality in which long-term prosperity is subverted by short-term stock valuations. And obviously, we have to end the culture of recklessness in our financial markets endorsed by an ideology of indifference in Washington. As the American people invest in these companies, I think we should ask the companies to invest in the American people. I think we should consider requiring financial institutions participating in this Treasury plan to create an American Priorities Fund to be part of their portfolios, to invest in clean energy, infrastructure, mass transit, manufacturing, education, and other public goods and goals that would be well served by greater private investment. Along with the rescue package will be a number of tax credits that will be passed by the Senate tonight. Again, Chairman Baucus has done yeoman's work getting these tax credits put together. The Senate supported them before in it as a fix for the alternative minimum tax, energy production tax credits. In fact, we will be stimulating the economy for Main Street while we pass this rescue package for our credit markets. I think that's the right combination, but we need to do more. Instead of toxic securities that nobody can understand, are so complex and lack all transparency and accountability, banks should be investing in clean energy facilities in Buffalo or new auto manufacturing plants in Detroit to build more fuel-efficient cars. We should be repairing our bridges, our roads, our tunnels. We should be investing in high-speed rail and making sure that Amtrak is just not a second-class railroad, but competes with the best anywhere in the world. I think, Mr. President, that the agenda before the Congress is a very important one for our country. We cannot continue to shuttle from crisis to crisis. This is a sink or swim moment for our country, and we cannot merely catch our breath. We must swim for the shores, and we must do so together, not only as a united Congress, but as a united country. There's so much work to be done in America, so many investments that will make us richer and stronger and safer and smarter, that will enable us to look into the eyes of our children and grandchildren and tell them that we're leaving our country in as good, in fact, better shape than when we found it. At this moment, we can't say that. But I am absolutely sure, based on the bipartisan cooperation that we saw on this bill in responding to a real crisis, that we will see more of that in the months ahead. Our new president will certainly demand it of us, but we should be demanding it of ourselves and demonstrate to the American people that the United States Congress will lead the way into a much more confident and optimistic future for America.